Hello everyone. I'd like to start by recognising the traditional owners of the land on which we meet, the Gadigal people of the Eora Nation, and pay my respects to elders both past and present. We're really excited to kick off session 1 of our mutual bank webinar series today, which is part of our broader mutual content series we launched this month, focused on building the bank of the future with open data. The series is specifically for the customer-owned banking industry, and we hope you find the content interesting. The topic of today's webinar is open data and the digital banking customer experience. I believe open banking is now ready for you to start building the future, centred around data and customer experience. I don't think anyone would argue about these two tenets, but how you use data to drive customer experience is an endless journey. And I hope that this webinar surfaces and shares what people have learned. Frollo has been working with customer-owned banks since before the launch of CDR in 2020, and we are delighted to continue helping mutuals make a positive impact on the industry and their customers. We are thrilled today to have Joseph Healy, CEO of Judo Bank, join us to provide a keynote. Thank you, Joseph. I am sure that Joseph needs no introduction. Joseph is co-founder of Judo Bank, whose mission is to make lending human again, transforming the banking landscape for SMEs that need it most. You will likely know that Joseph is a career international banker, having held executive position at Lloyds Bank, CIBC World Markets, Citibank, ANZ and NAB, where he was Group Executive Divisional CEO of Business Banking. What you might not know, however, is that Joseph has 5 international football caps for Scotland at youth level and trialled at several clubs, including Arsenal FC. Before I hand over to Joseph, I want to thank everyone on the webinar for joining us, as well as Joseph and the other panelists. So, Joseph, over to you.
Thank you very much. Thank you for those kind remarks at the beginning. I want to talk very briefly about Judo Bank, the origins of Judo Bank, the reasons why Judo Bank came into existence, and then how we planned Judo Bank from a PowerPoint through to a viable, profitable and growing business as it is today. And doing that, I want to then draw the links to the mutual sector and the lessons that I believe were evident in the journey of Judo that are relevant, I think, to thinking about the future of the mutual sector. And just going back to the beginning, we started working on Judo Bank in earnest in 2016. The reason why we started working on Judo Bank was a strong sense that the banking industry in Australia, which is one of the most profitable banking industries in the world, had lost sight of its core purpose, particularly when it came to looking after the needs of the small to mid-sized business economy. The banking industry in Australia had aggressively moved from being an allocator of capital across the economy to an allocator of capital with a huge bias towards the household sector. And I could run through all the data points for that. That would be necessarily very productive. But what was evident to me and others in 2016 was that the SME economy was being poorly served by the banks. And that was evident in all the customer satisfaction surveys that you want to have a look at. It was very hard to find one that scored the banks on a scale of 1 to 10 higher than 3 when it came to the SME economy. And so what we saw was a market failure. We saw a strong, profitable banking system that was very good at providing mortgages, that was increasingly doing a pretty ordinary job of looking after small to mid-sized businesses. And that was really in the context of which we said, let's build a bank from a PowerPoint that was purpose-built, a pure play specialist bank that only looked after small to mid-sized businesses. And that strategic narrative that we developed in 2016 is word for word the same strategic narrative today. Judo Bank is a small to mid-sized business specialist bank with a purpose, a very purpose-driven bank of being the most trusted SME business bank in Australia. Now, when we started designing Judo Bank, again, from a blank piece of paper. There was no precedent for this, incidentally. But when we started designing it, we said there are three things that are really critical to the future success of this company. And we started thinking about these things over a 10-year horizon. So we weren't thinking about year one, year two. We were thinking about what do we want this bank to look like in 2026? So let's start building with the end in mind rather than building in an incremental way. And there were three things that we said are really critical to the success of the company. The first thing is that we had to have real clarity on the amount of capital that we needed in this bank to take it from a PowerPoint to a viable business. And we determined in our 10-year financial plan that we needed to raise $1.5 billion of core equity. You say that very fast, because back then it did sound like a very daunting task, given there was no precedent for it. And we had a very strong banking system, as I mentioned earlier. But we said, let's make sure that we're clear about our capital requirements. Don't go raise 100 and then raise another 100. Go to the investor market, say this is 1.5 billion in stages over 4.5 years that we're going to need to build this bank to profitability. So that was the first must-have. And I'm pleased to say that we raised exactly $1.5 billion over 4 years per the plan. The second thing that must-have was absolute clarity on the problem that we were seeking to solve that the market wasn't capable of solving for itself. So in other words, what was the competitive advantage that Judo was bringing to market, and how was it going to sustain that competitive advantage in an economically viable way? Now, economically viable way is important here because we didn't want to build a business that customers loved, but didn't make any money, because that's a recipe for disaster. So you've got to be quite commercial about this. We said we need to get this business to profitability in 4 years. So clarity on the competitive advantage was the second most important must-have. And the third must-have was a strong management bench. This wasn't a case of one or two people. This was a case of assembling a strong team with complementary skills that were passionate about what we were doing, that we were able to encourage out of the comfort, if I can use that term, of the senior job in big banks and say, come and take a big risk. The chances of failure are very high. The chances of losing all your money are equally very high. But if you're successful, this will be the best thing you've ever done. So don't live a life of unfulfilled dream about building something from scratch. I'm quite a convincing salesman, actually. And so those were the three must-haves: clarity, competitive advantage, and a strong management bench. Then the next thing we did was having clarity on that vision for the company, which we saw over 3 horizons. So Horizon 1 was 2016 to 2021, which was all about build a bank, get a banking license, get to market, attract staff, attract customers, and show that this is a viable proposition and get to profitability. And this was in a world where fintechs all around the world were talking about, we've got 200,000 customers, we've got 100,000 customers, but by the way, we're not making any money. So again, go back to the fundamentals of business. You have to make money to invest. So 2016 to 21, get to market with technology that was fit for purpose, but not fit for the future. I didn't want to overspend on technology and then find there wasn't a viable business there. Demonstrate the business economics first, and then invest heavily in technology. And that then brings us to Horizon 2, which is 2016 to 2021, which is invest in scaling the bank, which is all about technology. It's all about investing in building a modern, technology-enabled, but customer, human-centric relationship proposition, so that you had a banker sitting across the table from the butcher, the baker, and the candlestick maker, and the small businesses could speak to somebody about their business. But that banker was then enabled by modern cutting-edge technology with all the information, no legacy technology, processes, and culture, but build a brand new bank. And so we're in a Horizon 2 now, where we're spending well over $100 million in the next 3 years on CapEx, on technology-enabled capabilities, so that we're in a position to scale this bank from its current position. That takes us to Horizon 3, which is 2026 and beyond. And the vision for Horizon 3 is to build and demonstrate a world-class SME business bank. Not the biggest SME business bank, it's not part of our aspirations, but world-class. And we've defined what we mean by world-class. We want to be growing at double by 2026, a lending book of $20 billion, growing at double system, a net interest margin of 3%, a cost-to-income ratio in the low 30s and heading below 30%, a cost of risk well below 50 basis points of lending assets, and a return on equity in the mid-teens, and a customer satisfaction score as measured by NPS of at least 65, plus 65. In an industry where the average of the big four banks when it comes to SMEs is -5. So this isn't just a little bit better, this is order of magnitude better. And that with a staff engagement in the high 70s. So when we add those up, we say this equals a truly unique, a truly world-class SME bank, and that's the journey we're on. Now, how does that all relate to the mutual sector? A big part of the reason why we established Judo was a sense that the SME economy was being poorly served, and that competition was not a strength of the banking system. You had four big giants. If you take away their logos, they're very similar in the way that they operate. And small businesses didn't really have much choice. Judo was introduced to the market to provide choice. The mutual sector is an important part of future competition in the banking sector. But the economics, as I see the mutual sector from the outside, are the need for investment in technology, the need for investment in scaling and building very attractive propositions for the owners and for the customers of these businesses is going to require a radical rethink about the business model of the individual components. Now, that doesn't necessarily just mean merging together to create scale. It's got to have a strong sense of what it is you're merging and building for. I go back to the story of Judo. We're here to look after the SME economy. In 10, 20, 30 years' time, we'll still be here to look after the needs of the SME economy. We're very clear on purpose. We're very clear on the need to build a bank that is profitable, that has a very high level of customer satisfaction, and that's constantly investing in the future. And I think this is a big challenge for the mutual sector, is being clear about what that future looks like, being clear about the value that it adds to its customers, and being very clear about how it can sustain an economically viable business model that allows investment in future growth. And of course, at the heart of that, and a big part of that, is open banking. It's technology enabling. But at the end of the day, technology is there to provide a great service. It doesn't define a great service. For a lot of customers, certainly when it comes to the small to mid-sized business sector, we cannot see a future that does not involve the human engagement. I call it the high-touch, high-tech business model. In a world that's trying to digitalize and centralize and automate everything, there is still a big segment of the business community, particularly the butcher, the baker, and the candlestick maker, when they're trying to invest and grow, they want to speak to somebody who can first of all listen and understand, and then can think about how to solve their needs. So I think the parallels between the story of Judo to the future direction of the mutual sector in Australia are quite strong parallels, and there are lessons that can be learned that are relevant to thinking about the future. So on that note, I might draw my remarks to a conclusion. Thank you very much for the opportunity to provide these opening remarks.
Thank you, Joseph. That was great. There's so much in that I think people can take away, and that I take away as well. In terms of purpose, and Frollo is a purpose-driven organisation. I won't go through that, but in our session 2, we'll be talking a little bit more around, money management and what Frollo's purpose is about helping people. But I think we have, between the mutuals and what Judo have done and what we do ourselves, a lot of common ground. Do agree certainly that in this world of digitisation and the new era that people relationships and people being able to call someone is helpful. My wife especially knows that because she won't do anything online. She goes to the bank branch and does everything that she needs there, and often has a much better experience than she does online. So obviously we have to get a lot better in terms of what we do online. But we have some tools, and now we need to kind of work out how to use it. So thank you, Joseph, again. I'd like to introduce Renee and the panel. So next in our panel discussion, we are very happy to have Renee Blethyn, our facilitator today. Renee is a passionate advocate of open banking and open data and improving the lending experience using the consumer data right. Renee is head of partnerships at NextGen, Australia's leading technology solution provider to the lending industry, including banks, non-bank lenders and brokers. And Renee does know quite a bit about lending in her experience, so a lot more than I know, and I've probably been involved in lending for many years as well. Some of you may be aware that NextGen acquired Frollo back in 2020, and we work together to empower our customers, namely mutual banks and lenders, to improve customer outcomes, financial well-being and responsible lending.
I'd like to welcome our panel and invite them now to join the discussion. Shedding light from their respective roles as customer-owned banking industry leaders, we have Sally McKenzie, Non-Executive Director, Regional Australia Bank and CEO, Delta Advisory. Welcome, Sally. And Greg Nichelsen, Chief Data and Analytics Officer, Teachers Mutual Bank. Welcome, Greg. Providing insights from challenging the status quo in financial services is Joseph Healy, CEO and co-founder of Judo Bank. And revealing insights gained from experience in working with mutual bank first movers with open banking is Simon Docherty, Chief Customer Officer of Frollo. Welcome.
Thank you in advance for sharing your experiences and thoughts today. And where we'd like to start is at the mutual bank customer experience, because that's what we're all here for. And I love Joseph's insight that banking's lost its way a little bit, and very keen to unpack. So customers of mutuals are accustomed to deeply personalised experiences, and historically this has been delivered via branches and involvement in community causes. This has definitely translated into high customer satisfaction, particularly when you compare it to the major banks. And what I'd like to do is direct this question firstly to Greg and Sally. So would you like to share with us, how are you designing your service experiences with the digital customer in mind, where the branch experience and local connection are either not as important or being replaced by a digital transaction and or service that is going to deliver the same close contact that mutuals are famous for? So please share any specific examples. And
I'm happy to kick off if you like. I mean, I actually really like what Joseph said about the high tech, high touch. I don't think it's actually a binary choice. And I actually think that what we're going to find is, yes, the evolution has been very much around moving those in-person customer experiences to a digital one, and customers have received that really well. But I actually think the future is much more of an integrated model where you do have that face-to-face, or you do have that human interaction, as well as having that sort of seamless digital experience. And I think for mutuals, that still allow them to leverage their competitive advantage. But it comes back to really thinking about what's your value proposition. And I think this is something that the mutual industry is struggling with a little bit, to be honest, particularly as they get, a lot of mutuals seek inorganic growth through mergers. They become less connected to that traditional customer base that they've had. And so I think it's really important to be very, very clear about what your value proposition is first, and then think about how do you deliver that in a way that provides the digital experience that consumers really want, but still maintaining that relationship advantage that the sector has.
So I'm the data guy, so I'm going to say that a large part of how we're thinking about the problem, and the reason my role, which is relatively new, exists, is there is a sweet spot between digital capabilities, customer engagement, customer experience, and the role that data plays in connecting those two things together. So there's a couple of lenses that we bring to this. One is a much bigger focus on the journeys and particularly as they relate to our niches. So our niches are quite unique, but we don't necessarily stop and think, well, what's really unique from a journey perspective, from a data perspective, from the way we engage. We've done it traditionally, face-to-face, but have we ever thought about what that looks like digitally? So there's been a lot of focus on that. And we have a bit of a catchphrase around how do you digitize what it means to be a niche? And it really is that. How do you think about being a teacher or being an essential worker in some shape or form and thinking about what that means digitally? And still creating the connectivity and starting to try and reproduce some of that, not all of it, because it's balancing act, but trying to think what's the data way, the digital way to connect with our customers the way they need to be connected to. That is really unique to them and doesn't mean that we're paying in competition with someone who's got a lot more to spend on an app. That's just focus on the feature they're going to put on an app, because that's not what it's about. It's not about us just putting a whole lot of features on an app.
Thank you. And Joseph, I wanted to ask in the Judo plan, how are you guys thinking about designing your service experiences from a digital perspective?
It's actually central to the way we're thinking about the business model. We are a relationship-centric bank. We want our bankers to be out with our customers, and they're speaking to the butcher, the baker, and the candlestick maker. But to do that, technology is critical. The information that we have on customers, the insights that we can provide on customers, making it easy for customers to do business with us and making it easy for our bankers to look after our customers. The whole digital strategy is absolutely core to that, and kind of trying to capture that in a metric. I've talked about our target customer satisfaction to make sure that that's in the at least in the mid 60s, and our cost to income ratio I want to be in the low 30s. That really is all about technology, largely enabling. I mean, I always think that technology should enable, not define, a great service from the proposition of a Judo bank, and so our ability to scale this bank, to take from where it is today, to build it into a much larger bank that has world-class metrics, that is all contingent on the successful execution of our digital strategy.
Thank you. I'm very keen to explore, as part of, we're talking about a lot more digital experiences and technology being the enabler that enables the service that's uniquely delivered. A key element that plays to the core of that is trust. And I'm very interested to explore with each of you how you see the role of trust playing out as these experiences evolve and as we move to potentially a lot more of the actual transactions with customers that make up the relationship being formed in a digital way. How do you see trust evolving and playing out? Simon, would you like to?
Yeah, I mean, I can kick it off. I guess just an impression from talking to a lot of different mutual banks. It's really about. I mean, it's core. It gets mentioned a lot in the mutual sector. So it's core to who they are as banks. And I think it's really going to be challenged, particularly in a world of much more open data, in a world that cybersecurity becomes a real kind of focal point. And we're certainly seeing the rise of that. Last year's Optus and Medibank breaches are something that really brought it to the fore for a lot of banks. You guys would know much more than I do. So I think the great thing is that open banking itself plays into that, in that it's coming from a regulatory regime. It gives consumers control, transparency, and it helps build on that trust. So I think that's something that really, for us as Frollo, we're very encouraged that the trust is core for mutual banks, because we do see that open banking really fits nicely into helping them with building further trust in an increasingly digital world.
Thank you. I'd love to hear from the others on how you see trust.
I might start. So 5 months into my role, and obviously part of the role was to put together a bit of a data strategy. We did choose the word trust specifically to define one arm of our strategy, if you like. And it's got two lenses for us. So one is we're entrusted with information about our customers' data stored in databases, etc. So what do we need to have in place? What do we have in place? What future state do we need to have in place to protect that and live up to that? But there's also the reverse, where we're looking for trust in data to be able to do more with the data than we have. That's both internally. So if we want to build data science models or whatever, do people trust and understand how they work? Are we doing the right things with those models so they can be trusted, so that they're transparent, so that they're ethical, etc. And also with our customers, if we want to be able to do more to create more hyper-personalization or to manipulate the journey from a digital and a data perspective to move things in certain directions, are we trusted to do that? How do we build the trust in we're doing things the right way? There's careful thought been going into all of these different things that we're designing, and that's how we're thinking about trust, both externally and internally.
I think about the evolution of the consumer expectation around data and privacy. I think it wasn't that long ago that people were concerned that companies had their data. I think that genie is well and truly out of the bottle now, and particularly with some of the major incidents that you mentioned, Simon. But now I think that consumers accept that companies have a certain amount of data, but they're wanting to look for organisations that they can trust to hold that data, so that that data is used for good and not evil. And I think consumers are really aware of the difference between that. And I think this is where mutuals actually have the advantage, because they have always been trusted institutions because of their model and because of the way in which they service their customer. And for me, the connection is open banking is to think about not just open banking as a compliance, but actually as a competitive advantage. So how do you leverage the use of technology and leverage the trust that consumers have to build innovative product and services? And if we think about where CDR is likely to go in the future, you think about these life admin centres where institutions can have all of this data about customers that relate to banking, telco, energy, super, health. If you can be that institution that can be trusted to leverage that data and provide recommended, personalised solutions for your customer, that's a fabulous place for mutuals to play in. But I also think it's really critical that mutuals don't neglect, while the innovation is great, don't neglect the basics and the fundamentals around cybersecurity. I think this is a real issue for the sector, and I think it's got some real contagion risks, and perhaps we'll explore that a bit later.
And Joseph?
Well, I would echo much of what Sally said. I think of trust as a much broader value. And I mentioned it in my remarks at Judo. The purpose of Judo is to be the most trusted SME business bank in Australia. I know through experience that trust arrives on the back of a tortoise and leaves on the back of a galloping horse. And so you've got to treat it as an important strategic asset, actually an important cultural asset, that you have an organization that's built on values that have trust and integrity at the center. It's the way that people work with each other. It's the way that people communicate with each other. It's the way that people think about the customer. And, the banking industry, historically, and some might argue true today, has not done a great job in establishing trust with customers. Customers don't necessarily feel that the bank will do the right thing by them. They feel sometimes that the bank will do the right thing by the bank. Take longer to pass on deposit increases, but reprice mortgages within 24 hours. And these things are road trust, where you call up the banker and you say, look, I've got $10,000 or whatever the number might be sitting on a call account. I mean, you could have called me and said, put that on a 30-day deposit account. In other words, a bank that's acting, thinking, and working for you so that you feel that there's trust as a core foundation of the business. But that is cultural, and it goes right across the organization, certainly into the way that technology is built, stored, and used. I think it's fundamental. And there's a great prize for businesses that have built a reputation for being trustworthy. And there's no conflict here, between, it's not be trustworthy or be highly profitable. There's an and here. If it's a cultural characteristic of the business, it could be a high trust organization and a highly profitable organization and an organization that people want to do business with. But you've got to protect that. You've got to think of trust as a strategic asset. As I said, it arrives in the back of a tortoise and lives in the back of a galloping horse. And it's very hard to restore once it's lost.
Yeah, I think remembering the entrusted, that trust is an expectation. I think that some banks feel when the customer becomes a customer, they automatically feel to remember that we are entrusted to look after them and do what is in their best interest. And I think mutuals obviously do that extremely well with their service value proposition. I want to move now into specifically talking about open banking, open data, which came out in the last question. So how do you, Greg and Sally, see the role of open banking and open data as potential inclusions to achieve the desired outcomes from the large digital transformation projects that you have in mind for your organisations?
You can go first.
So I think for us, it comes back to thinking about those journeys, thinking about the niches that we have, and then where are those transaction capabilities, those data points where we can hook in and better build the experiences than we can build today. We're never going to have massive budgets to be building everything. Our journeys help us focus, understanding specific touch points within those journeys where we need to excel, need to do better, are important to our customers, our ability for us to show some sort of differentiator, and then leverage the way that open banking can support us from both a data perspective, but also just from a transactional perspective. It's really the way we're thinking about it.
I think for me, the potential lies in really being able to understand your customer. So, you talked about the mutual evolve where, the local branch manager really knew everybody and, it's a very personal experience. For me, open banking allows you to do this in a digital way, to have a really, a fulsome picture of what your customer and where they are in their journey through their life, and help them understand how they can get the most out of where they are, but also position themselves in the future. I think sort of in response to your question about, how organisations think about this in the context of transformation, I think one of the challenges with mutuals is their scale, obviously. And when it comes to technology projects, there's those things we have to do from a compliance perspective. So that the must-dos, and then there's the kind of things that we want to do for whatever reason. And I think it's very difficult to be able to navigate both of those at the same time when you've only got limited scale within the organisation. So from a board perspective, I think it's really useful to understand that management is thinking about these things in a long-term strategy, like a holistic strategy. So fine, we have to do this, this, and this, but what about those bits that we want to do, and make sure that they're not kicked down the road continually just to continue to do the things that we absolutely have to do. So I think it's building a longer-term strategy and making sure that organisations are taking their board on that journey as well.
Thank you. And Simon, I wanted to particularly ask you obviously about open banking, open data, and any experiences you'd like to share on the mutuals that you're seeing being first movers and the opportunity that you see.
Yeah, I think there's some great themes coming out here. I mean, I totally agree with you, Sally, and I hear that a lot from mutuals about how they prioritise and where does open banking fit. What we understand really well from the mutual industry is that they've had the regulatory imposition put on them, and that's been a big project, and that has to take priority, obviously. And then it's okay. Well, we've had this extra burden of resource and expense put into the business. How do we now look at whether or not we can get some value back from that investment? To your earlier point too, Joseph, it is about driving value. So it's almost when you're that far down the road, you really need to just go a little bit further to try and get some value back. And I think one of my messages is certainly don't try reinventing the wheel. So the value in open banking and open data is really in taking an existing process, or like lending, in a bank, and inserting this great new form of data that allows you to then do that better, which picks up on a couple of things that we've heard today. And so that's what I think mutuals should be thinking about. Okay, well, it's not that much of an extra leap to get into it. Let's not think about doing something completely new, something that's going to really challenge our existing priorities. Just think about how do we use just better data to power existing experiences. Lending is a great one for that. There's an example coming out of the UK now where the lenders are saying that the use of better data means that for every one additional loan that they reject, there's 6 or 7 more that they can approve. So just using that better data in that lending process means that you're going to increase your approval rates. And that came from an Equifax report last year. But we're hearing lots of kind of similar examples coming out of the UK. So I think my message is really don't try and overthink it. Look at what you've got existing in your business and how using a better form of data can help supercharge that.
Fantastic, thank you. And just in line with the project planning when it comes to that digital transformation, Sally, we talked a little bit about in preparing for today, the need to be able to take a long-term view to be able to manage that. Is there anything else that you would like to share in terms of the approach that you're taking?
Look, I think, and I think this picks up on a point that Simon made. So the regulatory impost is real, like it is a real challenge, but I think I'd like to see a bit more of a shift of mindset in the industry to go, rather than just looking at something like something as a compliance exercise. So take CDR and open banking, for example. How can that actually drive competitiveness? How can that deliver on our strategy? So looking at technology and the investments as enablers to achieve the strategy. And I think Joseph talked about that experience at Judo. So looking at the investments in technology, and not just from a compliance perspective, but also from a competitiveness perspective.
And keeping with that competitive theme, but moving into the profitability pitch, Joseph, that you were talking about, an alternative to the Big Four is an attractive proposition for customers. What I'd like to do is just talk a little bit more about what you touched on in your intro around how mutuals make sure that they're building a sustainable business model that is going to be able to grow rather than just survive. And really interested to hear from yourself, Greg and Sally, about the approach that you're taking to be able to do that, particularly with challenges around scale and mergers and that changing customer expectation. And also from the research, we know that traditionally mutual bank customers actually have more products across more banks than the Big Four. How do you stay relevant and front of mind in that whilst you're transforming that digital journey?
Yes, that's definitely a challenge. You've encapsulated, one of the everyday conversations that we have as a mutual. I think it's focus. I think part of it's focus. One of the roles I play as the data guy is helping provide some of the numbers and things that help us with where are the areas that we need to focus, where are the challenges. Some of it's focus. We're going to be able to do everything. Some of it is, as Sally mentioned, get the best bang for buck. So if you're doing this, what else can you get at the same time, and trying to stoke up anything benefit that we get. The customer journeys that I've spoken about a few times have helped us with focus, certainly. And then the simplification of, well, actually for the niches and what we need to provide, what's the essence of what we really need to provide? So getting right back to that essence and making sure that works well. Some of it is just if the absolute standards work really well and we're focused on improving the processes there, on digitizing, on embedding data into those, in focusing on the customer experience, that helps us to shift away with the stuff. But it's hard. It's a constant battle of what don't we do, what do we do? We're making calls all the time. And same with what we're going forward, making calls all the time about what do we go ahead with, what don't we go ahead with. It's a tough environment.
Yeah, I would agree with all of that. I think it is a real challenge. I think it's a couple of things. One, I think it comes down to there's a misnomer, I think, in the industry that we're not-for-profits, right? And I've heard the sector being described as that, and it always irks me because we actually are for-purpose organisations. We're not-for-profits. We have to make a profit, and we have to make a profit to be sustainable and to allow us to invest in the kind of technology that allows the organisations to grow. So I think that, you know, there has been more of a focus in recent years about profitability and about chasing profitability. And I think that organic growth is actually a really good development. But equally, what I'd hate for us to lose sight is that real kind of value proposition, like really super clear about what your value proposition is. And I think Regional Australia Bank does this really, really well. You know, there are every board meeting that we're at, there's always some point where someone talks about, you know, who are our customers and how does this align with who our customers are? And, you know, we're embedded in Regional Australia. And I think that's the advantage. Getting those two pieces together, I think, can help some of that prioritisation and just being really clear on where your investment lies.
Thank you both. Joseph, because it was something that you spoke to, I'm very interested to hear any additional insights that you'd like to share.
Oh, yeah, I see this as a strategic issue, not a next year tactical thing. You've got to get off the busy dance floor onto the balcony and say, what is the future for the mutual business model? What value does it bring? What's its purpose? How is it evolving in a rapidly evolving environment? How does it deal with the regulatory impost that only is going to grow? The technology requirements are only going to grow. All the other requirements, like, for example, ESG, these can be quite overwhelming. And that's why I think that the answer here is is a strategic question. What do we want this business to look like in 10 years' time? And take the time to think and discuss that. Because if you don't do that, you're constantly fighting a battle about meeting the regulatory requirements, meeting the ESG requirements, meeting the technology requirements, fixing technology problems. You've got to get off that dance floor. Otherwise, you'll never move the dial. So I would frame it as a strategic issue that really has to have a 10-year, I know, forecasting and visualizing 10 years out, let alone 5 years out, but it's important. And then build with the end in mind. And perhaps, although staying true to the values that define mutuals, that customer centricity, but almost draw a line under the past and say that the future of this, my business, of this industry, should not be shaped by its past. It should be shaped by the future opportunity, but staying true to the core values that define it.
Thank you very much. I'm going to actually flip to some questions that we have from the audience. So firstly, thank you. The first question we've got is for you, Joseph. And the question is, in your view, why doesn't one of the big four give a decent amount of capital to a team and let them operate outside of the parent to deliver what you have in the SME space? Do you think it's apathy or risk appetite?
It's a great question. It's what I would do, actually, if I was sitting inside a big four. The problem is cultural more than risk appetite, in that, you know, culturally, large organizations struggle with entrepreneurial functions. I mean, they might love the idea and give some seed capital to get it up and running, but then you're starting to grow something that's different from the body, and you start to get cultural tensions that arise, and people inside the more established and mature businesses look at the capital that's being allocated to the new growth, the new pin-up boy in the business. So it's cultural. Now, that doesn't mean it can't be done, but this is not a question of risk appetite. This is a question of organizational culture. And I would never underestimate organizational culture in large banks. Never underestimate it. You know, trying to get something off the ground as an entrepreneur inside a big bank is very, very difficult. There's always 7 or 8 people who say it's a bad idea for every person who says it's a good idea. And if you get through the 7 or 8, there's another 10 lying in the long grass waiting to jump on you. It's exhausting, but it can be done. So it's culture, and it has to come from the top, and it has to be a commitment over years, not a commitment over, let's see how this goes.
Great, thank you very much. The second question is to the panel. So the question is, where do you see the use of consultants in the development of the customer experience? But more importantly, where not do you see consultants playing a role? So I don't know if anyone would like to jump into that question with a very short notice.
It feels very topical coming from Canberra at the moment. There's a lot of talk about consultants and a different group of Big Four. Look, I think consultants are actually really helpful in the mutual space, because we don't have all of the resources to bring expertise in-house. I think it's about finding the right consultants, though, the right consultants that really understand the mutual model and don't just take insights from some of the larger organisations and input them in. I think it's really fun finding the right people that really understand the DNA. But I've also seen the industry rely on consultants that have been sort of doing the same thing for a number of years, and certainly they have value in terms of the sector knowledge. But where I think that there could be more of an injection of new ideas as well. So it's about how do you get that balance right. So it's quite a generic answer, but some of the other panelists have.
Yeah, look, I think we suffer from the same thing. You know, the amount of budget we might have to invest with the Big Four consultancies isn't what they're used to getting when they're dealing with the larger companies. So we do get a reskin of something else. And we know we're doing that because that's what we're spending on it. But it means it's not really relevant. And if we really want to be niche and celebrate being niche and celebrate being unique, we can't do that and get a generic flavoured thing at the same time. So it is a balancing act. I've been the data guy again, a lot of comparing ChatGPT responses with consultancy responses, because ultimately consultancy work comes from the greater scope, and so does ChatGPT. So they have a similar sourcing of where they might get information from, and it's a fascinating exercise for anybody on the call that wants to take, say, a privacy framework or a data governance framework, and then compare what ChatGPT might tell you to do. We had a restructure. What might a chief data office look like? It's almost word for word. So there's some opportunities if you're going to do generic. There are cheaper ways nowadays to get generic, and then spend your money on the stuff that's niche and truly unique to you, because that's the value add for you. And that's the bit that's hard to get the right balance for consultants.
Thank you. Joseph and Simon?
Oh, I think there's potentially there's a false economy sometimes in using consultants. We've seen that just in some of the projects we've been involved with in tier 2 banks where they have used a consulting firm, and ultimately all the consulting firm has to do is adjust to the culture of the bank, understand it, and then kind of start from the ground up in building whatever project they want to. So I think you can do that with people on the books, I guess, or yes, get the right consultants to do it. As opposed to pulling in the big name. A lot of times they won't be able to bring particular expertise. And I think that would be very true for the mutuals because they operate in a very different way. You're probably better off finding the right consultant who is in tune, or doing it yourself if you can.
Did you want to add anything about consultants? I have one more question, so it's up to you.
Do you use them?
I would use them carefully. They are overused, by the way, and I think that's a big mistake. There are a lot of problems that businesses need to address. There are people inside the businesses that could address them. Use consultants where there's expertise that you don't have. But the proliferation of consultants has been to the detriment of management, in my view.
Thank you. And the last question that we've got time for, which will take us back a little bit to the research and I think the opportunity with open banking, potentially, depending on your insights. So it's to the panel. Do customers of mutual banks want more than financial banking help? And if so, what else and what might that look like? If anyone wants to dive in.
I think there's a real opportunity there, actually.
Yeah.
Because I think it comes down to what I was saying before about trust. And trust, I think, is going to become an important commodity in the digital economy. And so if you can be the trusted institution to not just provide banking services, but as I mentioned before, that kind of end use case of CDR that's talked about, this live admin centre, why not? Why wouldn't customers find that valuable to have a trusted institution that has their interests at heart, to be able to use their data to provide personalised products and services in an unbiased way. I would want that.
I think the unbiased thing we talked a little bit about, and I'd love to hear views on that, because there is definitely a sense from that customer base of customer-owned banks that it is independent and unbiased, and therefore does that open up that opportunity more?
It does, yeah. So definitely there's a belief that we can be more trusted, that we've got more interest for the customers than maybe the Big Four. And so therefore that is a big opportunity. But in essence, a lot of the research we do in our niches would still say the needs, the actual stated needs when they're researched are pretty standard. They're pretty basic financial needs. And that's what people are looking for us to do outstandingly well. Outstandingly well. I think for us, the big focus at the moment is do those really outstandingly well.
And so, Simon, do you see as open banking continues to evolve and becomes open data, do you see that there will be the opportunity for multiple products and services that are going to be able to be enabled through that technology?
Yeah, I think hyper personalisation is what we're sort of touching on a little bit here, and that's what open banking enables. And because it gives the customer one place where they can have a 360-degree view of their finances. And I think mutuals are really right in the pocket for leveraging hyper-personalisation the best, because they do have that trusted relationship. I mean, we talk about, if a customer is banking with Regional Australia Bank and then has a interest saver account with ING, Regional Australia Bank being able to get visibility of that first, and then being able to adjust products to be able to suggest to the customer that they have an amount of money sitting in a high interest account there, but you have a competitive product that you think will be able to convert across to, and you're in a great position because they're already a trusted customer of yours. So I think that's the real. It's not about reinventing the wheel. That technology is here today. The relationship with the customer is here today. A lot of the building blocks of being able to do that really well sit really nicely in the mutual space, and open banking will. I think it will really take off just to provide little insights that drive value for customers and help build on that kind of trust.
Thank you. That brings us to the end of today's discussion. I'd like to thank you very much for all of your contributions, and to the audience, thank you so much for your questions. Quick reminder that we will be sending you a recording of this webinar, and there are two more that if you've enjoyed today's discussion, hopefully the next two will be just as good. So those are around money management and then the lending use case. Check out the Content Hub, and definitely, if you want to build the technology for the future, which we've all covered off today, please reach out to Frollo because they've got some great insights to share. So thank you for making the time today. Thank you, everyone.